Welcome back to another video. So a few days ago, the Bank of England increased interest rates again by another 0.25% and they now stand at 1.25%. So what does this mean for property developers, investors and landlords? Well, in simple terms, it means that the cost of your borrowing has gone up, your buy-to-let mortgages will increase, and also any other borrowings to do with loans or mortgages, the cost to borrow that money is going to go up and your monthly fees are going to rise. Simple as that. However, it's not time to panic. Don't believe everything the media says, and certainly don't take in some of the ridiculous words and comments the media makes. I've just been reading this on the Express, and the first line of the article says UK interest rates have seen another spike in a bid by the Bank of England to help curb spiralling inflation. Now, there's really no need to use words such as spike, because when I think of the word spike, I'm thinking of sharp increase, and that's certainly not what's going on here. It's only gone up 0.25%. It's not drastic. It's not going to have a big effect on everyone. So the reason that interest rates are going up is simply down to the fact that inflation has gone really high. Now, recent estimation is that it's at around 11%. In real terms, it's probably higher, or it'll certainly get higher. And the only way to combat this is by raising interest rates. And when we raise interest rates, the idea behind it is to slow spending down, stop people from borrowing as much, stop people spending as much, and encourage them to save, which then in turn should lower inflation. And a good way to describe this, I was out with my children the other day and they were playing on a seesaw, and when they got off the seesaw, sort of one end dropped to the floor whilst the other end remained in the air, obviously. Now, what they were trying to do is they were trying to balance the seesaw so that it was level without anybody being on it. However, to do this, they had to go and find objects such as bricks and plant pots and things like that, and they put it on one end, and obviously they had to find the right amount of objects at the right weight to balance this out. Now, this is in effect what the Bank of England are doing right now to curb the rising inflation. They're gradually picking away at interest rates to bring inflation down. So what we'll see is they'll probably keep increasing interest rates by 0.25% until they start to see inflation drop. And when inflation drops to around 2 to 5%, they'll probably freeze interest rates again, because on one hand, we don't want huge interest rates because it'll just cripple the property market, it'll cripple the economy, and we'll plunge into recession. However, we can't leave things as they are at the minute because inflation is too high. So it is understandable why the Bank of England are increasing interest rates at a slow and steady pace. So the Bank of England are basically acting like the seesaw scenario that I just mentioned with my children. So if interest rates are really low and inflation is really high, then the only solution is to actually increase interest rates so that inflation drops and the seesaw starts to level out. Exactly the same thing as what's going on here. Fucking flies. So what does all this mean for property prices? Well, in my opinion, property prices will start to level out. They'll start to slow down, because what we've seen happen is over the last couple of years, especially through the pandemic, people were moving up the property ladder a lot easier than they were previously, because interest rates were so low and people had surplus cash because of lockdowns and things like that, which meant that people could buy houses what they couldn't otherwise afford before all this happened. Now that interest rates are going up, people are going to find that they can't afford to go up the property ladder, they can't afford to buy bigger and more expensive houses. So this is just one of the factors that will slow the market down. And for me, as a property investor, I know that a lot of people want to time the market and they'll think, I'm just going to wait a couple of years for the property market to crash or prices to come down. For me, it's not something that I'm going to be doing, because I don't think it's the right thing to do to try and time the market. I think it's always better to be in the market rather than trying to time it. So I'll continue to buy property, invest in property, and I do know and I'm fully aware that there will come a point where I buy one of these properties and then within a few weeks or months the value will be lower than what I paid for it. And that's just something I'll take on the chin, and it's something that I'm prepared to do because I have a good sized portfolio, and if I just get one or two properties that put me in negative equity, then it's not such a big deal when I'm holding them for the long run. I've got good cash flow, and I know that over time that property is eventually going to be higher than what I paid for it. Now, another interesting thing which I've just read on the Times is the headline reads, UK property company insolvencies soar as interest rates rise. Now, what the frig is going on when people are going bump, or sort of say property companies are going bump just because of interest rate rises? It's only risen to 1.25%. Now, if a company's going under because interest rates have gone up to 1.25%, then I'm sorry, but there's something seriously wrong with your company. Now, I don't know if it's just the editor being naive or not understanding what they're talking about, but surely property investors aren't going to go bump just because the interest rates have gone up 0.25%. It's ridiculous. If they've gone up 5%, 6%, then I could totally understand it. But if people are getting themselves into trouble by such a tiny increase, then you really need to have a good look at yourself and consider what the hell you're doing in property. Now, I know there are a lot of other factors like the rising cost of materials, and actually getting materials is difficult, getting labourers is difficult. I understand all this, but from what this article is saying, just because the interest rates have gone to 1.25%, all property investors, all these companies are going under. Absolute tosh. Again, the media stirring things up and making everything sound 10 times worse than it is. Now, I'm not denying that these companies haven't gone insolvent, they haven't gone bump, because they probably have. What I'm suggesting is it's probably down to other factors, other reasons, probably down to fear. People are susceptible to fear, especially what we read in the papers, and there's no doubt that with all this cost of living crisis, inflation, potential interest rate rises, and also the possibility of property crashing, it actually stokes fear into people, and this is when things like this happen, where they exit the market, they sell up, the companies go insolvent, and basically they just come crashing down. Mainly down to fear and not because of the actual facts on what's going on. So if you're a landlord, if you're an investor, if you've got mortgages coming to the end of their term, then if it's within the next few weeks, few months, on a personal account, what I would do, I would then go and fix my next mortgage for as long as I could. I think buy to let, you're looking at probably 5 years. So if you can get a fixed 5-year buy to let mortgage, I think that's going to be the safest option, because there's no denying that interest rates will still keep creeping up. Remember, we need to balance that seesaw. So it's best that if you can fix your mortgage now rather than later. I've got a couple of buy-to-let mortgages coming up at the end of this year and a couple next year, which I'll have to refinance, and hopefully the interest rates haven't gone up too much. There's no denying that my monthly payments will be going up, so I will have to plan for that, and I will have to either take them losses, or other options are to increase your rent for your tenants. However, you want to be careful by how much you increase your rent, because you don't want to drive them out. I think slow and steady increases is the best way to go. Most people understand the current situation. Most people understand that things are going up, mortgages are going up, so there's no reason why their rent shouldn't go up. But proceed with caution, only do it in small increases. So how much do I think interest rates will rise by, and when will be the point where they freeze them or even drop them again? Me personally, I think once they get to around 2.5 to 3.5%, we'll start to see inflation come right back down. Also, the energy prices is also going to help inflation to drop, if you look at it in a way whereas households won't have as much cash, they won't have as much spending power, because obviously we're spending a lot of money on our gas, electric, fuel bills. So that could have an effect on inflation. Now, it's a bit of a double-edged sword, because when energy prices rise, everything else has to rise, because supermarkets have to transport food, companies have to use fuel and energy, which then has to be passed on to the customer. However, the customer hasn't got as much money as they did have before because they're also paying more for fuel and energy bills. So it's a difficult conundrum to solve. So if you've got an opinion on interest rates, if you've got an opinion on what you think inflation is going to do or what you think is going to happen to property, please leave your thoughts in the comments below. I'll do my best to answer everybody. Also, if you enjoyed this quick video, please hit the thumbs up button as it really helps a small channel like mine to grow. And I'll be back soon, hopefully before they put the interest rates up again. And I'm currently looking to buy my 7th property and I'll keep you updated on that. I'm currently looking at a few at the minute. Hopefully the market has cooled down a bit, so there may be room for negotiation, we'll see. But I'll definitely keep you updated on that and I'll catch you soon.